Everybody, what is going on? It is Crypto Bobby. Hope you are having a great day, great night, wherever you are watching or listening in from. Have a special edition tonight of Crypto Happy Hour. Got the man, the myth, the legend, Frank Chaparro, aka Frankie Scoops on. What's going on, Frank?
How's it going, man? Good
Good,
to see
good.
you.
How's life treating you?
That's treating me well. If I was any better, I'd probably be two or three people.
Well,
I had a beard.
yeah, I got it is happy hour. I know you got a little bit of booze. I made the stupid mistake of thinking that this, you can see on the live, that this was actually a stout, but apparently I'm dyslexic and it is a rhubarb compote sour, which sounds absolutely disgusting, but that's the only beer I have in my fridge, so I'm going to drink it. But what are you sipping on?
I am sipping on some Bullet Bourbon Frontier whiskey
Oh, that's not bad.
right here. It's very delicious. It's very smooth. I hate sour, so
Yeah.
I'm pouring one out for you.
Yes, please do. I might pour this out myself. But as far as things go today, want to talk a little bit just about the work you do in the space, at the block right now. Previously, Business Insider, you've done a lot of work covering the institutionalization of crypto, like traditional finance, getting into the crypto game, and just have an interesting background in general. So I think a lot of cool stuff to cover today that people will be interested in. And I will also be not only putting this on the podcast, but keeping an eye on the YouTube comments here as well. So if you guys have questions, we'll definitely do my best to keep an eye on those so we can kind of address anything interesting that might come in outside of your daily shill. Shout out to the guy shilling Kin ecosystem already. So we got our first one. But yeah, we can hop into it now. And I think one of the big things, like I said before, that you cover is like the institutionalization. Hashtag the institutions are coming. The herd is coming. So want to
Where?
just kind of get your take a little bit about like the work you do in that space. Maybe you can give some people a little bit of a background, as far as like what you've reported on in the crypto landscape and where you think things are going from now.
Yeah, thanks so much. Yeah, that's a good question. So where it is now is a lot. I think the space has finally figured out that institutions are definitely interested in this space, but they're starting to realize that they move a lot slower than people in crypto. I think a lot of whether it's crypto Twitter or developers, etc., people in the space move, and my team here at the block, we move incredibly fast. That's not how large investment managers or large investment banks operate. And so, although there was talk in 2018 and in 2017 of working groups at different large firms, or talk of them expressing interest in the market. That doesn't mean necessarily, and I think we're starting to figure this out right now as we move into 2019, that interest on Wall Street in crypto, especially among firms that manage other people's money, means that immediately, and by immediately I mean 6 to 12 months, that they're going to start making any sort of noteworthy or newsworthy move into the space. And I think Goldman Sachs provides probably the best example, right? They were kind of the ones that in 2018 made the biggest headlines about starting a cryptocurrency trading desk, right? That was the big news back in 2018, that they'd have a desk, and they made some hires that and they had a New York Times profile that they would at the time they were kind of the most notable firm on Wall Street to be making a move into this space. But now what we see is that it was not overblown necessarily, but I think folks in the market, again, going back to my point, really did not think about how slow these firms move, right? So when
Yeah.
we think about custody, they were supposed to. There was a Bloomberg report last year that they were going to be going into custody. Where that stands right now is, you know, really far off from any sort of tangible product, from what my sources tell me.
Is that a is that a construct of like regulatory uncertainty in the US, or is that also a construct of like the infrastructure not being fully built out?
It's totally a construct of firms on Wall Street, moving slow and wanting to not do anything that regulators would be uncomfortable with, right? So my my sources at Goldman Sachs say they're at least 6 months away from even talking to regulators about a given custody product or about a given
Mhm.
or about certain moves in this space. So that's what we kind of thought 2019 would be the year of large institutions like Goldman coming in. I think 2018 was the year for them to learn about this space and
Yep.
to sort of put their toe in the water. Now it's 2019 is going to be the year of them working with regulators, figuring out what they're going to do, and then 2020 maybe will be the year that they actually do something of note. And you're seeing that trickle down into some crypto native firms, right? So I reported last week that Coinbase was making an interesting pivot for their
Mhm.
uh, institutional business away from the large hedge funds, and you think of firms like AQR, right, as an example, or Bridgewater or Two Sigma. Those folks are not ready to trade in this market, and Coinbase is moving away from thinking about onboarding those types of firms
Mhm.
and onto focusing on the crypto native firms, the crypto hedge funds, just because I mean, when you think about onboarding a large firm like that, it's going to be tricky. It's going to be costly. It's going to require more services, more handholding than a firm like Pantera
Yeah.
or Block Tower Capital, which is used to this space, is used to the technical complications that arise from investing in this space. And so there's two things happening, right? There's uh, firms like Coinbase that maybe went too far in the direction of, okay, this space is going to institutionalize. And at the same time, you have a slew of firms that are trying to capitalize on crypto's institutionalization, like ErisX, SeedCX, Backed,
Mhm.
who Fidelity Digital Assets, right, which is going to function as a broker and custodian. Uh, but they haven't proven themselves yet. And so it remains to be seen if the demand is there, if they're going to even launch in the first half of 2019,
Mhm.
right? And Back was supposed to launch in November and then December and then January.
And now it's
You know,
TBD.
I have one source that tells me it won't be till April when they launch, right? So that doesn't mean that the large firms aren't interested in this space or see the value proposition of digital assets and cryptocurrencies. It's just Wall Street is very, very slow moving.
When it comes to like the Wall Street entrance into crypto, um, I think one thing that maybe either people are confused by or they might have questions about is, is this a construct of Wall Street, like big firms like Goldman or whoever it might be, being able to buy and custody like Bitcoin for their clients that may want to hold Bitcoin, or is this more like Wall Street, whoever, like, no, these some of these hedge funds out there just trading Bitcoin, up, down, sideways, whatever the hell it might be. Which kind of way is the majority of the work being done? Is it more around like the custody, so people can actually maybe buy and hold something like Bitcoin, or is it more around the actual just trading of these assets as speculative instruments?
So I think there's two ways to answer your question. The first is when you mentioned clients, right? Clients of some of these larger firms. When it comes to a firm like Goldman Sachs or Morgan Stanley or JP Morgan, their clients right now are at the question asking phase.
Mhm.
They really are coming to them asking um, how this entire ecosystem works, right? What is Bitcoin? How is Bitcoin different from Ethereum? What are some of the use cases of the underlying blockchain technology? Most of their clients aren't even at the point of, okay, ready to trade in this ecosystem. How are you going to custody my assets? Now, that's one side. At the same time, we are seeing massive strides in the improvement of the market structure of this ecosystem, and the firms that are trading in it, and many of them are the high frequency trading guys,
Mhm.
the prop shop guys that are trading their own money. The companies servicing them are making huge strides to improve the market structure. So you think of a firm like BitGo, which teamed up, as I reported earlier this week, with Genesis
Yep.
Trading to enable BitGo's institutional custody clients to then be able to buy and sell through BitGo with Genesis providing the quote. And through that setup, none of those funds need to leave their cold storage, right? And so on one side of things, on the massive big firms that we all like to think about and would love to see headlines as the headlines of them entering to crypto, most of their clients are still figuring this space out. But the crypto native firms that have been here for a while are pushing firms like BitGo, like Coinbase, like blockchain to move further in developing the market structure. You have blockchain with a guy like Jamie Selway who is working on developing auctions and algorithms and building out their OTC desks. Stuff like that is
Yep.
still happening. It's just in that sort of dichotomy, right? That sort of has taken shape.
For sure. I think one question that I saw a little bit in the comments, hashtag ETF soon, one ETF. Any
Yeah.
thoughts on the ETF? And I know backed isn't necessarily the ETF, but like, yeah, timing on when that might be. I think Van Eck is maybe the closest one, or rumored to be the closest one. Is that something that people should have any expectation of in 2019, or is that just completely overblown?
The ETF is interesting. I was talking to a good friend of mine, Joe Saluzzi, who's a broker in equities and a very he's a skeptic of the space overall, but he said we should start charging issuers for every ETF application. It seems like almost we've had, you know, dozens of these things. And I said to him, maybe we could start using that money to pay off crypto scam victims. Um, do we see an ETF in 2019? I mean, with this, I mean, who knows how long this government shutdown is going to last,
It's
right?
true.
Well, there was that CoinDesk article that was really great that sort of looked at where how the government shutdown is impacting crypto developments, with the ETF being a notable one. And so I actually think that's kind of a big factor, right?
Yeah.
Depending on how long this thing goes on, the SEC is so much more interested in cracking down on some of these scammers and cracking down on blatant uh, blatant examples of folks circumventing securities laws that the ETF might be on the back burner. Um, it I think it depends on the price, right? If the market continues to shred billions, there won't be that liquidity there, which was one of the issues.
Hmm.
On the exchange side, though, I think we're seeing huge strides that might mollify the Securities and Exchange Commission. Things like market surveillance. Coinbase has been building out their market surveillance program. Gemini obviously has their own or rather, excuse me, they're using Nasdaq Smarts technology to surveil their markets. And so stuff like that is improving. And so it all depends on the exchanges really for the ETF. And I've written about this before. If they start getting their act together, if some of these groups that they founded, there's a few different SRO
Yep.
wannabe groups, one led by Gemini, one led
Can
by Coin.
for anybody who's not familiar with what an SRO is, can you talk maybe a little bit about what that is?
Totally. Well, these are like pre-baby SROs, and an SRO is a self-regulatory organization, and we have things like FINRA and U.S. Equities that basically provide a platform for firms in the space, exchanges and brokers and alike, to come together and define what are best practices, what defines best execution, meaning what defines if I'm a broker and I'm thinking about where I'm going to route a client order, how am I going to ensure that that order is priced at the best price and at the best time for my client?
Yeah.
So an SRO addresses a lot of these market structure type questions, and we see a few of them popping up. What's key though is for the exchanges to come together, and it's unfortunate that you have like three of them, right? With Gemini sort of leading one and
Hmm.
Coinbase leading the other, when they really there should be one, right?
Yeah.
And they should be coming together. And the problem, Rob, is that they kind of have their Silicon Valley hats on a little too strong, right? In as much as they want to be the Uber or they want to be the Facebook of this ecosystem, when that's not how markets work, right? There is never going to be one exchange. There is never going to be one broker.
Hmm.
Uh, Traders and investors, especially institutional investors, want options when it comes to where they're going to trade. And so this notion that I sort of sense from the market that Gemini can't work with Kraken and Kraken can't work with Coinbase is really something that I know we started at the beginning of this question talking about ETF, but it actually does tie into it. If they can't cooperate to set best practices and they can't cooperate to figure out how we can stomp out manipulation together, then that makes the ETF harder. But at the same time, you do see some improvements. So the question is, will there be an ETF in 2019? I think we're definitely on track. I think the chances are 50 to 70% higher than last year.
Gotcha. When you look at like the institutionalization of crypto, or just talk about for the main Wall Street finance herd entering it, what would you say is like the biggest misconception that like the average retail trader has about the institutionalization of crypto right now?
What is the biggest misunderstanding? I think we hit on a few points, right? That they move faster than, rather that they move as slow as they do.
Very slow.
Just because I think one misconception is just because you have stuff like you have things like BAC pushing out their launch date, or Goldman still saying the same thing they said 3 months ago, which is we're exploring all of our options. I wouldn't look at that as skeptically as some folks on crypto Twitter and elsewhere might. Obviously, you want to take any sort of press release with a grain of salt, but I think there is some truth to this notion as, hey, like, we're not doing anything concrete, but we are interested in this space. And I think there might be some truth to that, as opposed to just a cop-out type of answer. I think they are interested in, but at the end of the day, right, like, this is when a lot of these announcements and a lot of these a lot of news was breaking about Wall Street moving into crypto, the market cap was 500 plus.
Yeah.
Right? 500 plus. There is
Now we're not.
Now we're not. And it could just be, it is a faction to an extent of just, at the end of the day, you're looking down at not a piece of paper, but you're looking at things on paper and saying, this is $100 billion, right? I mean, it's minuscule compared to what trades in equities, stocks, bonds, and fixed income, where a lot of the time it just doesn't seem like it's worth it. And the way that a lot of these funds are structured, right, is so, you look at it like a massive hedge fund, right? There's no, okay, we're going to do something exploratory, give you some money to play with and figure out how to trade this market. It's very systematic. It's incredibly systematic. And so unless there is a glowing opportunity where they're going to make $1 million on something very quickly, it's kind of not going to be put right there it's going to be put on the back burner. It's not going to be prime. Yeah,
for sure. So just got one question from somebody that I think is somewhat interesting and kind of, I think, applies a little bit. So this is I think helpful for two things. So number one, this kind of reminded me of the talk now about Russia buying $10 billion of Bitcoin, and I made a video kind of giving my opinion that I thought it was bullshit. But somebody basically said, could institutional money already be entering into the crypto market under the radar? And it kind of goes to the point where a lot of people, when I said the Russia buying $10 billion worth of Bitcoin, I thought was bullshit, because they're not buying $10 billion. They're not buying 20% of the Bitcoin supply, quote unquote, under the radar. There's no way to really do that. But yeah, maybe could you talk a little bit like...
No, I think that's a really astute question. I think the question speaks to how not black and white this is. This isn't institutions are coming, institutions aren't coming. There are a lot of trading firms that make markets on, I won't name any exchange, but on international exchanges that are not open to customers, that operate through domiciles, right? And massive trading firms in the United States, some of the biggest, are making markets, arbitraging on international Asian exchanges, and they're not putting out press releases about it. They're not announcing it. They're not saying, hey, our domicile in Bermuda is trading on a Seychelles-based cryptocurrency exchange.
They're making too much money. They don't need to tell anybody else.
Yeah, exactly. But they are. So yes, 100%. Yeah, I mean, especially among more secretive type firms, totally.
Yeah.
It's a good question.
And to that point too, I think the thing, I don't know how much you've seen about it, but the Russia buying $10 billion worth of Bitcoin, which I think dropped on Daily Hodl from a tweet, and then it kind of went into more detail, does bring up a really interesting point to, in my mind, around like crypto journalism as a whole, because one like random website picked it up, and then the Telegraph picks it up, and then like there's this whole cascade, and it just gets more legitimate and more legitimate of a rumor. But to that point, like with crypto journalism, like what should like maybe the average like retail investor or just participant in this space, like what should the people listening to this right now like understand about like crypto journalism and like maybe some of the incentives or things?
They only need to know one thing, and that is every morning when they wake up,
Read Frankie Scoops.
They go to the blog crypto.com, scroll down our feed, and they'll know exactly what they need to know. That's distinguishing the signal from the noise. But no, 100%. I mean, I think because this space is so active and because this space has so many players trying new disruptive things, it amplifies the level of noise and rumor and scuttlebutt out there. And so it's all about reading the most trusted media sites in this space, whether it's our site or Breaker or CoinDesk or others. I mean, a lot of these. I mean, there are dozens of them. Someone sent me one in my DM a couple minutes ago, and I do think there are a lot of honest folks trying to make news, but a lot of them don't have the tools or the wherewithal or the journalistic experience. You can't just be some marketer who goes and decides to, launch. This is just a funny example. It doesn't exist, but Litecoin, ETH, CryptoNews.com, and think that
probably out there.
It's probably out there. I mean, there's a lot of them, and slap some words on a page and think that that's how journalism works. I mean, there's one in particular that writes a lot about what's going on in the Wall Street world, and you've called them out before a ton. And really, all they do is just make up words, they string them together, and they say that someone at Morgan Stanley told them.
Yeah, I won't name names, I won't name names for you, but in my opinion, Abacus Journal is a one such website that literally just makes up sources specifically in regards to Wall Street and says ex-Goldman banker with 2 paragraphs of quotes that are probably completely fabricated, but people read it and share it, and then they're also a good example of somebody who pays for engagement on Twitter when they have one tweet that has 70 retweets and 100 likes. I don't know. That's my personal opinion, but
yeah. Look at the bylines. If you see a new site and you see a story that interests you, go click on who wrote it and try to Google them and see what their previous history is. And if it's suspicious, if it looks suspicious to you, then I'd probably ignore it.
Yeah, for sure. And like as far as things go for you when you are working in the journalism space, what do you think are, I'm trying to think of looking at some of these. RC Phantom, he's not drinking, thought this was happy hour. He is drinking. We're both drinking. He's got some Bullet bourbon. I have a disgusting sour beer that I thought was a stout when I picked it out, and he just slammed his bourbon, so more power to him.
Cheers.
And I guess so one portion about crypto journalism, I guess in my overall like opinion here, is a lot of people will point about biases and things like that within an individual's reporting, especially in this space, because there's a lot of it's almost fanatical and religious in some respects. Like how do you, when it comes down to that, how do you like address the concerns that people have around biases or a lot of the feedback? Because it's really interesting as far as it goes, because it's like one of those things. I feel like it's like crypto, politics, religion, and maybe like sports. Everybody's just nuts about.
No, it's important too to think about because um, I mean, this is people's money, right? I mean, there's something about financial journalism that requires almost that extra level of distance, right? And when you're a crypto first publication, there's always a question hanging over your head. Well, if you're this into it, then you must have your own sort of personal take. And
Hmm.
the way we operate, right, is we have researchers and analysts who, using both their own biases and judgment, will put out pieces to inform our readers. But we also have journalists who are just, you know, waking up every day, looking at what the stories are for every person in this ecosystem, not one group over the other, not one faction over the other, but the entire ecosystem, to inform them to be better traders if they're traders, better developers if they're developers, better financial professionals if they're a financial professional. And I mean, personally, for me, I don't trade. I have some Bitcoin, very, very. I've never sold any of it, right? And the only skin I have in this game and the only thing that has brought me success is not, trading or making money, but telling good stories. And so, as far as that's concerned, it's really where the buck stops for me.
Yeah. And so I have two more questions for you that I want to keep here all night. Um, but
No, I've
one
got nothing.
one one of I thought the cooler stories that you ran recently was around blockchain terminal.
Sure.
And there was a lot of I thought that was a really interesting piece of investigative journalism, and I know some aspects of that got a little haywire outside of that. But like, what's the process of doing the investigation around something like that, where you kind of go in and you put together this really long piece of content that was, I think, really informative and shocking to a lot of people. Like,
Yeah.
how long does it take to put something like that together? How do you kind of understand all the constructs of that?
I think that's a good question, but I'll start by answering what happened as a result of that story, and what happens as a result of any important story in any space. After that story went out, you had a massive lawsuit filed by FactSet against Blockchain Terminal,
Yep.
$7 billion data uh, technology Wall Street firm.
Yep.
You had the FBI open an investigation into Blockchain Terminal, and you had obviously a lot of attention paid to what I think Blockchain Terminal spoke to is, um, you may have folks from very respectable backgrounds, and there were many people who worked for that company who were honest, smart, hardworking people, many of whom were geniuses, in fact, many of whom are top of their field, who got caught up in something that many people would say was not, frankly, was a scam, right? That's what a lot of former employees told me in the process of reporting that story.
Hmm.
So that's first, right? The ramifications of it being one, I think that's the big takeaway. And the second big takeaway being, there's almost like this Stockholm syndrome effect that I think, looking at that, you can think, oh, what are people? When in reality, it is, this was 140 people working on something that looked real, which aspects of it probably were very real. But, at the end of the day, it is what it was.
Yeah.
Um, the question, back to your real question, which was, how do you go into something like that? And it is all about verify, verify, verify. It's talking to one employee, ex-employee, talking to another, ex-employee, matching up the stories, and only reporting on things that match up 100%, right? And you know, we were sort of, that reporting was verified by a report in the Financial Post that
Hmm.
basically affirmed every claim that we made. And so it's a tiring process. It's a long process. It requires, hour-long conversations, hour-long meetings, looking at documents, images. I mean, the number of like folders I had on my computer, connecting dots and such. It was
Do you
Definitely
have one of those big like the big investigations of where somebody's at home, or like some
okay.
detectives
So
in the office with
I
like
actually
the thumbtacks and the strings leading to the founder, the CEO with the fake name with the failed hedge
okay.
fund?
So I didn't, but I did have every time I would try to explain the story right, I had in my notebook an image, all in red pen ink that showed the different sort of like groups within the company and how they were connected, and I couldn't explain the story before it was written without that chart that I had, and so I basically say, all right, I'm writing about this thing. I'd explain to be like, Frank, I have no idea what, like that is just too complicated. I'd be like, okay, here's my chart, here's Boaz, and here's how it's all connected, et cetera, et cetera.
That's funny.
So
Um,
basically,
that is funny. Let's see here. Hold on, I'm just reading some of these questions. What is the point of this live chat if you don't communicate with your viewers? Well, because I
as
feel
it
like having
was,
this live chat and it's too freaking bad, and that's your problem. So I'm sorry. No, I don't care. Hanging out with Frankie Scoops. We'll take some questions at the end. But yes, sometimes I just want to have a conversation without interruption. Relax. But I'm an asshole. But
back to you, Rob.
getting into the last question before we take a little bit of Q&A here. What is your, and this is, doesn't have to be, well, we'll put aside your journalistic integrity for a second. What is your hottest take on in just the crypto landscape in
Oh,
general? Like what's the hottest take? Give it to me.
oh, my hottest take. That's a good question. I don't know. I'm not one for hot takes.
Hottest, spiciest.
Hottest, spiciest take.
You're Italian. You have to have a hot take. This is
Yeah,
your last
well,
name. Your last name ends in an O.
my Italian is something that makes some folks might say makes me not Italian is that I really like pineapple pizza.
I don't think Bully's watching this, but if he is, we're gonna have to get back to him,
What
and we're gonna
he knows
we're gonna.
on this. He knows where I stand on this. I mean, my hottest take. I don't know.
As
I
as
don't.
Frank's thinking about this, you could throw in some Q and A for us as he's debating his hot take.
I have to think.
Any questions for Frankie Scoops? Throw them in the comments now.
Yeah, no. I'm just doing my thing.
Yeah.
I used to always tell people before I'd start interviews, I have no ideas. I just aggregate other smart ideas and then disseminate them out into the masses.
No own personal thoughts.
Kidding, of course. No, not really.
Well, give me a hot food take. Give me a hot New York City food take outside of pineapple pizza.
So we went out to cut right for Anthony Pompliano's live podcast, and
Yep.
I told somebody that I thought the tortellini was better than the steak. So that's that
That
I got pushback on that.
that's somewhat of a hot take. And if
Not,
if the questions in the comments, as far as it goes, could not be around specific projects, might be better just industry in general. I see one question on Decentraland. Interesting. Can we take this project seriously? Decentraland's a cool project, but if you guys have questions specifically on the industry as a whole, considering Frank's background in crypto journalism, especially with like finance, Wall Street, maybe we could touch on that.
I'll tell you, I was surprised by I'm surprised by how um, I think a lot of us got caught up in Wall Street coming into this
Yeah.
space. Again, like rehashing some of the points I made. It's not that they're not, it's that they're taking a much more slower, much more cautious approach. I guess a hot take that I have in writing about the rollout of potential Ethereum futures by some of these
Mm-hmm.
marketplaces. It'll be interesting to see if the SEC or the CFTC approves such a product, given Ethereum's transition over from proof of work to proof of stake. Um, the CFTC wants to make sure that they approve a product that they're going to know looks like what it is they
Bitcoin.
approve.
Yep.
And so Bitcoin seems a little more decentralized. It seems a little more, okay, we understand what we're getting into. Whereas Ethereum seems like it could move in different directions much more frequently, probably. And so I wouldn't be surprised if the CFTC does not give the green light for a Ethereum future. Obviously, firms can offer Ethereum forwards to strictly institutional investors, which would be a way
Hmm.
around it. But I guess if I had to have a hot take off of some of my reporting as of late, it would probably be that it might be more difficult for a firm to get approval for futures tied to Ethereum.
Gotcha. You think, and I know you mentioned that is due to a little bit maybe the more centralization than Bitcoin and the transition from proof of work to proof of stake. Would you, I guess, would you classify the initial crowd sale as part of that centralization? Do you think that'll be an issue that they have to overcome as well? Would just be the fact that Ethereum was started through an
Yeah, yeah.
ICO?
Um, I think that's a very interesting. I haven't formed my own opinion on it, but I do think it's very interesting. Clearly, what the SEC has said is that in its current form, right, Ethereum is
Hmm.
not, or what's interesting is they didn't even say it's not a security, and I think lawyers agree that language is very important. They said that it shouldn't be regulated as a security, right?
Hmm.
Which may be different, which may not be different, or in its current form, it shouldn't be regulated as a security. So if Ethereum does something different in 2 or 3 years, maybe it should be then. Um, who really knows? But the crowd sale definitely raises some interesting questions. Clearly, uh, it seems like the SEC is at a place where they think that it shouldn't be considered given the evolution it's taken since then. In terms of the future, I think some folks would say that's something they're thinking about. That's something that the CFTC is thinking about. Because remember, just because the SEC or one representative of the SEC says in its current form it's
Yeah.
not a security, doesn't mean that the CFTC isn't going to think, okay, we're looking at approving futures tied to this potential commodity. Uh, should we think about how the crowd sale might come into play, or how um, the transition from proof of work to proof of stake might come into play? To your
Is
point, they absolutely might think about those
is
things.
that something too, as like a follow up question to that? I think it's really interesting the number of regulators in the United States that have like basically a say on crypto, even though there's like no clear, because you have the SEC who says one thing, the CFTC says another, you have the IRS who says another. How does that affect just like the companies you talk to? Like, does it depend upon like the business they're in as far as the guidance they take? Like it's just really
I
interesting that there's no specific set of rules yet, and there's all these different regulators that are kind of trying to posture for control. It seems like.
I don't want to pick on Ledger X specifically because their CEO is a really great guy. It's a really smart company, but they've had, from my last count, 4 or 5 different chief legal officers or chief compliant officers in the past since they started 5 years ago, and I think crypto lawyers are making out better than anyone else in the
Oh,
space.
that's 100% true.
It speaks to just, yes, it is not easy, and sometimes you have to feel bad for the exchanges who have to operate under money licensing laws, under the SEC, under the CFTC, and for as much flack as crypto gets for being outside the paradigm of regulation, it'd be great if just one day they said, all right, they're all gonna fall under this proxy or under this, the auspices of this one agency. And yes, it is a headache. It is, and frankly, they're really, you want to talk about Wall Street firms. When I was at Business Insider and I talk about, talk freely with sources and stuff, there was far less of a worry about how their words might be perceived by a regulator than in the crypto world today.
Hmm.
Maybe not 2017, where it
Yeah,
was ICO, but today it's sort of like, I'll ping someone about a question and say, Frank, I'd really like to hop on the phone with you about this, but you know, I don't want legal up my rear end tomorrow morning
yeah,
because there's so much uncertainty, and there's so much uncertainty about what is kosher and what isn't.
for sure.
Um, yeah, 100%.
And so one question, and we'll take this as the last question, but I think this is interesting because that at least for, and I know, granted, all of you guys are not in the U.S. That are watching, maybe 50% of you are, but I saw a question about Gemini, and Frank and I are both in New York, and Gemini has this massive ad campaign in New York around crypto needing rules. On the other end of the spectrum, Coinbase, which was, in my opinion, basically like the most conservative company in the crypto space, has now been adding a number of crypto assets,
Yeah, yeah.
which was kind of like unheard of, or really would seem out of character maybe a year ago. Any like just thoughts generally as far as like the directions? It almost seems like a little bit of a divergent path in terms of like Gemini now saying, crypto needs rules and we're going to follow them, we're going to establish them, and Coinbase kind of has always seemed very, very focused on regulation and compliance, but now basically like saying, okay, the government isn't necessarily providing us with the clarity that we want, so we're just going to go and do our own thing. I'm sure they have very strong legal opinions, but at the same point in time, it's kind of interesting to me. I don't know if you have any thoughts on that.
Well, if I were to make a guess based off of what I've reported on and what I've seen, clearly Coinbase is trying to take a more international approach
Mm-hmm.
to uh, the way they list new coins and the way that they run their business. Right? It's not just about what assets can we list and how can we structure our business in a way that will make firms like Goldman Sachs or other companies comfortable, because those companies are only interested in probably trading one or two assets,
Yep.
right? And so it's not necessarily that, at the end of the day, all these firms want to make money, right? And so probably it wasn't that Coinbase wanted to come off as the most conservative company for the sake of coming off as the most conservative company, but maybe because they were trying to attract a certain clientele. Now, as I reported last week, they're looking at staying or sticking with the crypto native firms.
Mm-hmm.
It might not be that unwise for them to go into international markets and to list more. And when I talked to Dan Romero about the strategy shift, he mentioned how certain types of funds want to list or rather trade, and these are his words, more exotic coins.
Mm-hmm.
Whereas with Gemini, maybe they're making a different bet.
Yeah.
Maybe they're trying to attract, since they're in New York and they're right here, and they brought on some interesting talent, including Janine Hightower Soletto, who came from a company that was a part of Nasdaq, and they brought on a head of business development from Goldman Sachs. Maybe they're sticking. I haven't spoken to them too much about it, but maybe they're sort of sticking to that. Okay, we're going to lure in the folks, whether they're individuals or whether they're institutions that may not care about trading a diverse amount of coins, but uh, operating within a more slower moving, regulation centric marketplace.
Yeah. Yeah. I think that's a good point. It almost seems in some cases like, Gemini's kind of sticking out that, the more like Wall Street institutional focused strategy, whereas Coinbase might be in some cases kind of like getting back almost a little bit to like the retail roots,
And they
and
said,
almost competing like directly, more directly with the Binance in some ways.
I think one can make that argument. I think that stands to reason. Yeah.
Totally. Well, coming to the end of our time here, anything you want to leave off with, or anything maybe I didn't cover that you'd want to tell the folks that are watching, listening right now?
I think that we covered a lot of ground. I finished my bourbon finally.
This beer was disgusting, by the way. Thank you.
Finish it though? Did you or no?
I got like one sip left.
One
It
sip.
was a full pint, but it's like sour. It's sour. It's shocker. It's a sour beer. It's sour.
My ex likes sours, so I don't mix
She's sour.
well, thanks for having me on. But
Well, well, I appreciate the time, Frank. If you guys are not familiar with Frank, his Twitter handle, it's should be at the top of the screen, or if you listen on the podcast, it's at FinTech Frank. If you want to finish off a little pitch on just you and the block, that might be cool for anybody who's not familiar just with like the work you do over at the block.
Yeah, totally. So, here I am at the block. We are a very, very young, new crypto media research company that is pumping out exclusives that have been followed by literally Reuters. Bloomberg has cited our reporting. The Financial Times has cited our reporting. We've been followed by the Wall Street Journal. We've been followed by Fortune and Forbes because of the hard work that our team has the hard work that we do, and we want to help folks sift through the noise and the signal. And we have a wonderful, inviting website that helps folks do that. And I am focusing mostly on the Wall Street trading side of things here. So if you need help figuring out what is BS and what is not, we're the site to visit.
Awesome. Well, I appreciate the time, man. Thank you
No
so
worries.
much. And thanks everybody for watching and listening as well.
Appreciate it.
See you, everybody. Take it easy.